Hey, it's Sammy. On January 10th, Friday, we had massive red news today, non-farm payroll, also known as NFP. We were expecting some craziness today in the market, and boy, did it deliver. We had 5 trades, 1 break even, and 271 points. Let's take a look and see how everything broke down. Coming into red news, this was about 20 minutes prior. You can see that I said good morning to our group and let them know we are in a range bound situation. We had neutral data across the board. So what we had to do was wait for the breakout of red news. It could have went either direction because the goal is to manipulate. So let's take a look at what that looked like. You can see that red news is going to hit, and immediately this is real-time market generated numeric data across 6 time frames from the minute chart all the way out to the 4-hour chart. Everything went extreme, so we can take action. So essentially what we waited for was for that close of that, well, this is a 15-second bar to the left. We waited for it to close so we could jump back in after we had a good pullback. This pullback came up, kind of retested that bull support area and would not break it, so we entered the trade. Now you'll notice we have that trade protected and we locked 52 points. We got out right here at this support level, this green line. It is a combined with a Fibonacci level, so we're better off locking the points in, but you can see the trade went crazy still. All right, this is our next trade. We were gonna come back down and test this. You can see we've been hitting this GAN3 zone. That's this orange line over and over. Of course, we've got the stop losses moved into profit, so we're totally protected. And that stop loss gets hit. We've got divergence on the chart, so we're gonna go the other way. This is our mechanical soda process. The divergence of the D in soda, SODA, has finally locked in. So now we're going to go along, and you can see we're going to get short time for momentum and volatility on the minute chart coming up here. Of course, we want to protect that trade with that stop loss moved into profit. Now I always get asked about trailing, so you can see I'm trailing the kernel right now and locking in points regardless. However, with that powerful volatility and momentum, we quickly hit our 72 point take profit. Okay, this next trade is our open trade. So the market, as you can see, did a reversal or a pullback. For the market to open, there had to be some value created because nobody wants to sell low and exit low. We want to sell high. So the market had to pull back and find a valuable price area to sell. Once we get confluence and realignment, we're going to enter this trade. As the trade quickly pulls off, we're going to go ahead and move that stop loss into profit. We have our take profit set at this red line, which is deviation 1. You can see we quickly lock 69 points at deviation 1. Now you can see we've been testing bear support off of this trend line here. We've tapped this low zone right down here at the -123.6 Fibonacci extension. We have a boxer. We must have tested this GAN3 area of influence probably, I don't know, at least 8 times today. We got our confluence of data, and we are coming back off of bear support, so bears are still in control. Regardless, we have the stop loss moved into profit. The trade is protected. We're struggling at this zone. Now you can see that lime green line. We have a take profit set up down here at support level 3 or 4. We're actually just going to lock in at this 138.2 Fibonacci extension with 78 points.